For those of you that I don't know, Matt Burney is my name. I'm the Managing Director of Bulls and Bears. We write and publish small to mid-cap public company news across the country in the mainstream media. We publish in the West Australian newspaper, the Business News, the Sydney Morning Herald, the Age in Melbourne and the Brisbane Times. And I do a radio spot on 6PR, 3AW, 2GB and 4BC, all in relation to small cap or mid-cap public companies. And so I find myself in very good company here tonight. Can I start by recognising the man with the plan, the Managing Director of JP Equity, Jason Skinner. Where are you, Jason? Over there. And his fellow director, Nick Brownbill, our two generous hosts for the night. The first company to you, and the first cab off the rank is MTM Critical Metals. It has a dual focus on minerals exploration and metals recovery technology. The company's been on a tear this week, up about 100%. So for those of you that punted it last week, well done. For those of you that decided to punt it this week, I'm told it has more legs in it yet. The company ran after a strategic collaboration was announced with US-based Indium Corp for the recovery of, wait for it, the critical metals gallium, germanium and indium. MTM is represented here tonight by its Managing Director and CEO, Michael Walsh. Michael has an honours degree in chemical engineering from the University of Dublin. He previously served as a CEO of Voltaic Strategic Resources and a gold and battery metals exploration company based in Western Australia. Ladies and gentlemen, in the usual fashion, please welcome to the podium Michael Walsh from MTM Metals.
Good evening, everyone. Pleasure to be here. And today I'd like to make the proposition that MTM would be a great addition to your portfolio. And I hope I can articulate why. And first of all, I'd like to start off with a question. What if we could extract critical metals from waste economically and sustainably? Or what if we could improve the economics of refractory mineral processing? Well, at MTM, we're executing that vision right now. And why should you really care? Well, today, extracting metals is a very dirty, energy-intensive business. The two incumbent techniques, pyrometallurgy and hydrometallurgy, are, in general, energy-intensive, dependent heavily on fossil fuels for their energy, and also very chemical-intensive. And we've got a technique that can beat both of these techniques. And the real reason you should care is that the world right now, as Matt alluded to, is ever more dependent on metals than any time in history. So the metal consumption right now is at a peak, essentially. And all the technologies that we use for our modern life, semiconductors, computers, electric vehicles, they're all very heavily metal dependent. And there's one country in the world that pretty much exclusively recovers these metals and does the dirty work of the downstream processing, and that's China. And it's pretty obvious that there's a bit of a geopolitical spat between the US and the West and China right now. And take rare earth elements as just one example of these. They're ultra critical metals. They perform several critical functions in all your technologies. In your phone, there's like 16 of the 17 rare earth elements doing some critical function. And yet the West has conveniently offshored all of the downstream processing since the 1980s. And China has, I think, approximately 25% of the world's rare earths in reserve, yet they control almost 100% of the metal refining. So everyone has put all their eggs in one basket. And as Matt alluded to this week, and it's very fortunate for us, we get the macro tailwinds, but they've just, in the ongoing spat with the US, they've implemented an export ban on these three critical metals, gallium, germanium, and antimony. They serve several critical functions in many modern technologies. And this week we've announced a very strategic collaboration with a company that deals in gallium and germanium scrap that's of very high value. And how are we extracting the value from the scrap? Well, we're using a technique called flash joule heating. It's essentially an ultra-fast method of heating a material plus some proprietary processing and some proprietary catalysts, and in some cases certain gas reactants that give favorable chemistry. And the overall message here is that it's better than those two techniques that I've already mentioned, pyrometallurgy and hydrometallurgy. Now, it was invented in Texas by a professor called Dr. James Tour, and he's a very prolific scientist. He's won Scientist of the Year in the US several times. He's no stranger to the ASX either. One of his previous inventions went into an ASX shell about 6 years ago, and that company is now called Weebit Nano. Completely different technology, but you can see the success here. The market cap peaked at almost $1.4 billion just last year. So this guy is no mug, and he's no crazy academic, and he's the inventor of flash Joule heating. And this technology faces lots of skepticism. The most common thing we receive is that it'll never be scalable. You're using electricity to extract metals. These guys are doing it at gram scale in a lab. You'll never be able to scale it. Well, in my previous life, I worked for the world's biggest technology company in mineral processing and metal refining. And they're twice as big as the nearest competitor, $15 billion market cap type company. And yet, every single time we tried to introduce a new technology into a mining company, there was always skepticism. The mining company here in Australia in particular has to be one of the most conservative and skeptical group of people you could possibly meet. And in history, some of these technologies shown here have literally changed history. And they also faced initial skepticism. So take the first Bessemer converter, patented around the 1850s. And the guy, Henry Bessemer, he couldn't even get seed investors to fund him. And yet this really underpinned the Industrial Revolution. It allowed the expansion of the railway system in the US. It was the first inexpensive method to mass produce steel, but he could not get seed investment. Next, 1880s, the modern rotary kiln was patented. It revolutionized continuous processing. It allowed materials and minerals to be processed at a much bigger scale than previous. And again, it faced initial ridicule. The next big innovation, and it's very analogous to us, is the electric arc furnace. 1950s, it was patented. And at the time, all of the big steel mills ridiculed this technology. They said it's a toy, you can never use electricity at such a scale to extract steel. And yet, look at it today, it's by far and away the dominant technology of choice for steel production. It basically killed off all of the other competing technologies. And of course, we face the same skepticism. You'll never be able to scale this. But we're proving them wrong. And with this flash Joule heating, we've got essentially two business verticals that we're going after. One is industrial waste, so trying to get the metals out of spent lithium-ion batteries, semiconductor scrap, which contains gallium, high-value printed circuit boards, which contains copper, gold, tin, etc., and also mine tailings. So there's been several successful applications already demonstrated, already put out on the ASX that anyone can go and research. And we're also, the second vertical is mineral processing. We're trying to improve these problematic minerals that need lots of energy and chemicals and acids to extract. We've already had lots of success with spodumene, the main ore source or mineral of lithium, similar for rare earths. And we're soon to test niobium and antimony. So we're going after all of these really hard to process minerals. And because we're in the state, WA, that's the home of digging up lithium and sending it overseas for refining, I thought I'd just give one example here because of time, but we've really got game changer potential in the lithium refining industry. We've already demonstrated that we can beat the kiln, that kiln that was patented in 1880 and is exclusively used for calcination, for heating up the spodumene to a temperature that will allow the acid to then thereafter get at it. We can do the same effect that the kiln does in 3 hours in a matter of minutes. But the bigger game changer for lithium that we have is that we can completely change the flow sheet that they currently use. And it's best illustrated by this simple diagram. So the top diagram shows very simplistically the amount of steps needed to produce lithium carbonate from spodumene concentrate. It involves two big energy intensive kiln steps, calcination and the acid roasting. And then you hit it with sulfuric acid to form lithium sulfate, and then you try and pull out all the impurities that the acid brings into solution. So it's very OPEX and CAPEX intensive. And it's been around for about 70 years. It's the dominant flow sheet used in China today. And they couldn't even, Albemarle, the American chemical company, couldn't get this flow sheet to work in Western Australia. That project has been a disaster. And we have already demonstrated that we can take this spodumene concentrate and turn it into a saleable product just in one single step. So we produce lithium chloride in one single step by flashing the material in the presence of chlorine gas. And then in theory, there's only one more step to get to lithium carbonate. We haven't done that yet, but it's on the cards. And essentially, we've removed nearly 70% of the incumbent unit operations. So we haven't quantified it yet, but there should be substantial savings. And right now, we're preparing for scale-up, for true commercial scale-up with our demonstration plant. And the design for this is due for completion in early February. And it's going to be based in Texas, where our main operations are. And if you're looking for comparable companies on the ASX, the most analogous one is Hyperion X. They've been a real market darling. They've also got a tech license from a university in the US. They're also going after metal from scrap. And their market cap is nearly $1.5 billion today. And they're still not in commercial production. And this chart shows other industrial companies that you can see what a high valuation industrial tech commands if you can produce good results. And Matt already alluded to that just last week. The reason for our recent run is that it's the first time we've been able to demonstrate a strategic partnership from an external party, some big player who's done their due diligence and looked at this technology and decided that it's actually worth pursuing. Indium Corporation, they're a private company based in New York, but they're actually one of the world's biggest refiners of gallium and germanium. So it's a big validation of the technology, and we couldn't be happier with the macro tailwinds that have been announced this week behind it. So basically, get on board before we get into the ASX 300.
Well done, Michael, and I think that speech just opens your mind a little bit to the other opportunities that surround critical minerals. It's not just about finding them and mining them, it's about doing other stuff with them. I think that story is worth watching very closely. Ladies and gentlemen, the next company to be presented to you tonight is Novo Resources. Novo is an Australian-based gold exploration company with major tenement holdings in the burgeoning Pilbara Creighton. The company has amassed around 5,500 square kilometres of land in the Pilbara, and notably is only about 28 kilometres away from De Grey Mining's Hemi deposit. For those of you that follow geology a bit, you would realise that Hemi is a bit unusual in so much as the gold has intruded into the granite, and many a geologist has walked straight past the granite in the past, and those that walked past Hemi's deposit would have missed, I think, about 12.7 million ounces of gold. Well, Novo Resources is about 28 k's away, and guess what? They have a gold deposit intruding into granite, which tends to make people a little bit excited. And so tonight, to give you that story, I'd like to welcome Mike Spreadborough, Executive Co-Chairman of Novo Resources. Mike has a mining engineering background with over 20 years' experience in mining lead, zinc, uranium, copper, gold and iron ore. He was previously the CEO of Metals X, Managing Director and CEO of Nusantara Resources and Non-Executive Director of Cleantech Holdings, and he's a really good bloke. Michael, please.
Thanks, Matt. Beautiful. I hope everyone can hear us. Thanks very much, Matt. So a little bit of a different story. We're a gold explorer, which we'll talk about, but we're listed not only on the ASX, but also on the TSX. So we were originally on the TSX in September last year. We did the IPO over the ASX, and I'll talk a little bit about that at the end. And I've just got to warn you, this is a subset of the big corporate presentation, so jump on the website and have a look. I'll let you read the corporate presentation. I'm going to be pretty lazy here, so I'm going to start off with a video to give you a good overflow, and then we'll fill in some pictures as we go. So hopefully technology will work for us and the volume will work. Magic.
Led by an experienced exploration and management team and supported by highly reputable and aligned major shareholders, Novo is driving toward gold discovery success across a high-quality project portfolio in Australia. The company's priority focus is on the Egina Gold Camp in the Pilbara province of Western Australia, where Novo holds some 9,000 square kilometre tenure. Egina is an advanced exploration district which extends over 80 kilometres along strike, contains the Besha and Nunyerry North projects, and is situated along a known gold fertile structural corridor immediately adjacent to De Grey Mining's 11.7 million ounce Malina Gold project. De Grey is the largest shareholder of Novo through a 10.3% holding and is earning into the Egina joint venture through exploration expenditure over the northern sector of the Egina Gold Camp. The Egina joint venture between De Grey and Novo comprises the Besha project and adjacent tenements that cover approximately 1,000 square kilometres of existing Novo tenements. De Grey brings a successful track record of discovering, defining and developing world-class gold resources, and importantly recognises the potential of the Egina Gold Camp as a key growth asset. Early work at Besha by Novo hit all the right geological indicators for discovery success. Novo looks forward to partnering with De Grey to define the Pilbara's next major gold project. As a dedicated gold explorer, Novo is focused on delivering standalone gold projects with over 1 million ounce potential and has a strong portfolio of exploration targets to work with. These exciting targets are located in premium Australian gold jurisdictions in the Pilbara and Victoria.
Right, so let's fill in some of that. So across the Pilbara, we've got two main projects that I'll talk about. We will talk a bit more about the Egina joint venture, but we'll also talk about Balla, and over in Victoria, we'll quickly cover Beltopper. So if we focus on the Pilbara, video's a bit outdated, but we've got about 5,500 square kilometres of tenure. It represents over 400 kilometres all the way from Karratha across the Marble Bar. You can see in the middle, which is where we'll focus on, what we call the Egina Gold Camp. At the top of the Egina Gold Camp is Besha, so that's the Egina joint venture, and down the bottom is Nunyerry North, which we'll talk about. And just between Karratha and Port Hedland, you can see the Balla project, so we'll talk about that. Interesting enough, this time last year we did a great deal with SQM. We recognised the potential for lithium and we did a deal with SQM. You know SQM, very large Chilean lithium developer and producer. So with our joint venture with them, they injected $10 million into Novo. So this is really part of our story. We're really good at finding different commodities on our tenements and doing deals with people that allow us to continue our focus on gold. So let's talk about the joint venture. So we did this deal with De Grey about June last year. Fantastic deal. De Grey have to spend $25 million over 4 years to earn 50% of this project. So do the maths. 25 million bucks for 50%, and we'd only done 30,000 metres of air core. So why do you get the metrics like that? They saw the same type of geology that they saw at Hemi. So this project is only 28 kilometres away from the Hemi processing plant, and more importantly, De Grey talk about the second processing hub at Whitnall, and it's only 5 kilometres away. So De Grey have been very active. They've now completed the $7 million minimum spend, and they're off and running on a further $18 million, which they have to spend by June 2027. Now, you can't beat history. You know, we all know now that Northern Star have lobbed a $5 billion takeover offer for De Grey. What does it mean for us? I think it's a positive. You know, Northern Star want to pay $5 million for the ground that De Grey have, an advanced exploration development project, and we're right next door for it. So I think it'll be great. We're really looking forwards to down the track working with Northern Star. So the Southern Egina Gold Camp, so this is south of Besha. We've got 1,000 square kilometres. It's had historical drilling. You can see some of the great numbers here. 8 metres at 4.2 in some of the assays, 2.1 grams, 25 grams in some of the rock chips, 32 grams of rock chips. We've actually done 2 campaign drilling at Nunyerry North down the bottom. You'll see more announcements about that as we go forwards. But our team are really focused on looking across this area. It's been underexplored in the past. we're looking for the same type of stuff that you see at Hemi and other geology around the area. So again, it's another focus of us as a greenfields explorer, and we really are looking for big systems that allow us to push forwards to those 1 million ounces that we like to see. We really like Balla Balla. It's on the coast. We quietly accumulated 1,200 square kilometres of tenure, has had very little modern exploration. Why would you do that? It's that black line in the middle of the picture here, the shoal shear. So the geological hypothesis is, has the gold mineralisation tracked through the shoal shear no different to the structures that brought Hemi along? No one's done that. We're trying to test that hypothesis, and you'll see us go drilling in the later part of the first half of next year. And again, this is what we like to do, build up the story, go drilling, look for success. We heard about Victoria at our Belltopper project. It's quite a complex geological project, so I'm again going to cheat and let our geologists tell you all about Victoria and Belltopper.
Novo's Belltopper Gold Project is located 120 kilometres northwest of Melbourne and 50 kilometres south of Agnico Eagle's Fosterville Gold Mine in the gold prolific Bendigo tectonic zone. Gold is ubiquitous at Belltopper, as is apparent in the thousands of workings that dot the local landscape. Workings that target a dense network of high-grade gold reefs with characteristics of the epizonal orogenic gold class comparable to the world-class Fosterville Gold Mine. And most are only tested lightly, if at all, by modern drilling, whilst others extend or are potentially hidden beneath younger basalt cover, providing opportunity for future blind discoveries. Detailed outcrop mapping provides the fundamental data to understand the geology, prospective anticline corridors, structural framework, high-grade reef geometries, intrusion characteristics, and key controls on mineralisation styles at Belltopper. Coupled with geophysical data sets such as IP, gravity and magnetics, comprehensive drill logging and assay data, and 3D reconstruction of historic mining data, all combine to facilitate 3D target modelling and generation of a robust target pipeline at Belltopper.
So Belltopper has a lot going for it. We believe we've got the critical ingredients and the right geology to potentially host a world-class high-grade epizonal gold deposit, similar to what we see in the Fosterville deposit. We have a really wide alteration system with a unique polymetallurgy. We've essentially got a series of really high-grade, kilometre-scale gold reefs across the project area. And a lot of those reefs, they're relatively untested, and that we also believe that there is potential for those reefs to develop at depth. So in the current year, we've just recently completed a 6-hole, approximately 2,500 metre diamond drill program, and that's delivered significant results across a series of structural and geophysical targets that we tested. And it also included the discovery of 2 new gold reefs on the project, and both of those have reasonable strike potential. Importantly, the drilling has improved our understanding of the geology, including key structural target corridors such as the Belltopper anticline, which remains one of our priority target areas. So not only are advancing our target pipeline, we're also developing new, shallow and deeper conceptual targets. And we can do that now we have a much better grasp on the geology.
So do a bit of research. Belltopper's exciting. We've done an exploration target of 300 to 600,000 ounces. Jump on the website because I'll get in trouble without warning you on all the clarifications. So to wrap up, let's talk about where we are at the moment. Today we made a major announcement that we had sold part of our investment portfolio. So we have brought in today $11 million into the business. Our share price ripped up to about 50% at one stage, and we closed about 16% above our ASX close. So we've got, at the moment, around about $14 million in the bank. So that gives us the powerhouse to go forwards. If you look at the investment portfolio, what we sold today was San Cristobal. It still has a huge value, and we'll be using that to look at other projects going forwards. And if you look at the register, apart from De Grey, we can't be doing too bad to have Kerry Harmanis and Mark Creasy on our register. So we're doing okay. So just to wrap up, great team, great projects. I said I'd talk about the TSX. We're on the TSX. It can be really hard at times to pick up ASX stock, but it's really simple to grab it from the TSX and transmute it across to the ASX. We can help you, and I can guarantee you there's a great arbitrage at the moment, so you can make a little bit of money on the way. So thank you very much, and enjoy the night.
What he forgot to tell you is that the Novo's remaining share of that Canadian unlisted private mining company is worth about $19 million. So you got a fair runway there, Mike, before you have to raise capital again. Thanks very much to Mike. Okay, so the third and final presenter for the night, ladies and gentlemen, is Firebird Metals. Firebird is an advanced manganese development company, another critical mineral, focused on the development of its flagship Oakover project based in WA. The company is also developing innovative processing technology and the downstream delivery of high-purity battery-grade manganese for the lithium battery market that is becoming more and more manganese dominant, I might say. Okay, so to tell you about Firebird Metals tonight, I'm delighted to welcome Mr. Peter Allen. Peter previously held the MD role of marketing for Consolidated Minerals, which operates the Woody mine in WA, and the Nusata manganese mine in Ghana. He has a very solid manganese background. Ladies and gentlemen, please welcome Peter Allen.
Good afternoon. Thank you guys for attending. Thanks JPs for organising. We'll get straight into it. Whoop, sorry, too excited. Okay, so look, first I want to say, look, we are different. Yes, we have a manganese resource. Yes, it's in Western Australia. Yes, we're working to develop that resource. But we see a huge potential in going downstream first and looking to develop a manganese sulphate plant. You know, manganese is growing in importance in batteries, as Matt mentioned, and you know, we really see there's a timing advantage in going into that first. And the other reason we're different is, you know, many people are looking at diversifying away from China. We are looking at going into China. We're not afraid of going into China. You know, we see that the market is there, the technology is there, and there's lots of benefits to be there. And then we look, you know, our longer term strategy is how we can then take all that knowledge, take everything we learn out of China and build a second plant and put that in a Western jurisdiction. So really to why to invest in Firebird, I guess, like I just mentioned, there's a greater shift towards manganese and lithium ion batteries. No matter what type of cathode is in the, you know, in a battery, manganese is growing in importance. You know, if it's a nickel-based NCM battery, the M is manganese. You know, there is moves to increase the manganese content. You know, if it's a lithium iron phosphate battery or an LFP battery, you know, that is got a lot of advantages based on cost and, you know, safety. By adding manganese to that to make LMFP batteries, you know, you end up with a much superior battery. But in general, why to invest? So a great shift towards manganese and cathodes. You know, the technologies that we're going to be using are all commercially proven, all being used in, you know, the main market of China at the moment, and there is no upscaling risk. The other thing is we've been able to acquire an excellent team in China. You know, the technology in China and the technology, you know, the people behind that technology are first rate. Manganese sulphate being production in China has been for many, many years. It's a well advanced industry, and so we really look to leverage those people. You know, we've, over the last year, since announcing our strategy, have really managed to hit a number of key milestones. Like in just a year, we've gone from scoping study to feasibility study. We've built a pilot plant for the process. We built a pilot plant for a calcining kiln. You know, we've achieved getting permits for environmental, energy and safety to operate in China. You know, we are well advanced in our plan. The other thing is, you know, we're looking at how we can consistently add value. So not only taking ore and then turning it into sulphate, but then taking that sulphate and turning it into a cathode material. And under all of that is being underpinned by our resource in Western Australia. So, like as I mentioned, we won't spend much time here. I think I've spoken about this already. Manganese is becoming far, far more important in every cathode. I mentioned a couple before, but to add to that, in sodium batteries, manganese is a key ingredient. In lithium solid-state batteries, manganese is a key ingredient. So, what you've seen is a progression from traditional nickel-based batteries in China, then being taken over by LFP batteries in China. Again, as I mentioned, lower energy density, but about a third of the cost of nickel-based batteries, but a much safer battery with a much higher thermal runaway point. Again, you add manganese to that, you increase the energy density by 20%, you retain the safety, you retain the cost base. So why China first? Like I mentioned, the market is there. Over 90% of all manganese sulfate today is consumed in China. There is a massive EV industry in China. The EV industry in China is going very, very strong. Within that industry, there's a much greater drive towards cost efficiency. And how do you improve on a very cost-efficient battery like an LFP? You add manganese to it. We've got, the technological leadership like we've spoken about. It's a very well-advanced industry. We've got some of the best guys from that industry working for us. The beauty about China is you build a plant in China and everything you need is within a chemical park. All your key inputs, your reagents, the consumers of your residue are all there. So it drives a very much micro sub-economy climate within that chemical park, driving a very cost-competitive OPEX. And that also then drives a very capital intensity, or very good capital intensity and a very low CapEx. So, we're looking at it, positioning ourselves in the right place at the right time for that market. We took some investors back mid-year to China. I think seeing is believing. Once they saw what was capable of being achieved in China, the quality of the projects being built, the quality of the chemical parks and the support that we've already gathered, I think everybody came away very impressed. And I think, a project is nothing unless you have the right people. We are very proud of the people we've got. We've got a good board, but what we've got is even better, is a better technical team in China. The technical team is led by Wei Li, who's just over there, just raised his hand. Without having a guy on the ground in China, what we've achieved in the last 12 months wouldn't be possible. If you look at the quality of the people we've got working for us, Mr. Joe's 20 years experience in manganese sulfate production. He's run his own plant, he's built his own plant, he's consulted to 90% of the manganese sulfate chemical plants that are in operation in China. Very, very experienced, and what we see is his experience coming into our process flow sheet and our operating costs. Recently we announced a value add project of taking our sulfate into LMFP cathode material. We've entered into an agreement with Central Southern University, a very well known university for mineral processing, non-ferrous processing. We brought in Professor Ming and Professor O. These guys are at the front end of the LFP curve 12 years ago. We're very happy, very pleased that they've joined us in developing and in our collaboration agreement. Really won't spend much time here. This is really just a photo of our pilot plant that we've built. And really the thing about our pilot plant, as I mentioned, this is all proven commercial equipment. We actually took it from working equipment and scaled it down to build our pilot plant. A number of key things within our pilot plant demonstrate the efficiencies that we've gained. Our process is very simple. There's a couple of things I want to touch on a bit later, being the roast reduction kiln that was kind of mentioned earlier, and then the crystallizing process. We've got unique technology that really drives our costs down on that basis. The other thing to mention, the beauty of being in China and our process flow sheet, there's zero waste. There is no waste. You cannot have waste. So what we do, everything gets consumed, everything gets sold, everything gets used. We actually have a very efficient, a very environmentally friendly process. Like I said, we completed a feasibility study back in May for this plant. $83.5 million US dollar capital, 10.7 million US working capital estimates. And if you compare that to Western peers, companies that are looking to do this outside of China, you can see when you do your own investigations, capital bills 3 to 4 times that, operating costs at least double that. When you consider that the prices that they need to be economic, it's very difficult for them to survive. We are With our operating costs around 600, just below $600, we're very competitive in today's market and all future markets. On funding, we've been working hard. We've negotiated with the China Construction Bank. They're prepared to do 50% of our capex bill. We're working with China Chemical, a very large EPC company in China. They have agreed to give us a deferred payment on parts of that cost. So roughly, we're about 60% of our way through our financing requirements. Where we're going to build it is a place called Jinshe in northern Hunan. Hunan is the province marked in red there. If you look at the graph produced by Benchmark Minerals, about a third of the world's battery plants are within those light blue provinces. So, we have got all the customers we need surrounding us. Like I mentioned, lots of competitive advantages, that circular industry. The park is on the Lisha River, which connects to the Yangtze River. It really does drive a very cost-effective business. That's a graphic of what the plant's going to look like. Different aspects of the plant. It's really a first-rate development. Two things that I then want to finish on is within our process flow sheet, we've developed two very unique propositions. We've designed our own calcining kiln, as mentioned earlier. Calcining kilns use a lot of energy. A traditional manganese sulfate plant, you put in manganese ore, you add carbon, you heat it up to 900 degrees, you then cool it back down to 80 degrees, and all that energy just goes to the atmosphere. With our very simple design, we've captured all that energy, we reuse it to preheat the incoming material. Through our trial work, we save 70% of energy by using our own calcining kiln design. The benefit of this design and what we're very, very excited about is this has lots of applications in other commodities. Finally, we'll just skip to everything we've delivered. The other thing, what we're doing is a value-add proposition, taking our sulfate, converting it into lithium manganese iron phosphate cathode material. If you think about what I mentioned about competitive operating costs, crystallisation phase is about 25% of your operating costs. If you don't have to crystallise it, you keep the sulfate in solution, take it into cathode material, you've got a value add and a huge cost saving. That's our resource. It's 85 k's east of Newman. Really, we're horribly undervalued, so please get in and support us. Next year, what we see is a very big year for us. We look to make great strides. Thanks for your time.
He doesn't look anything like the real Peter Allen, does he? Really interesting, Peter. Thanks very much. Folks, the theme of the evening was stocks to watch, and I think the overwhelming message from our speakers is that both critical minerals and gold are worth watching. In fact, they're probably worth doing a little more than that, and certainly in relation to our three speakers tonight. Can I also recommend to you JP Equity? If you're not already a client of JP Equity, you might talk to one of them. I have to say my observation over a lot of years is that first it's run by a group of young blokes, well, at least young in relation to me, but they're sharp and they're smart, they're doing things, they're involved in a lot of different things, and certainly worthy of your consideration if you want to weigh into the market. JP Equity, I'm going to invite Nick, one of the directors, to have a chat to you in a minute.